The top business stories live from the Sky Newsroom. Following on from Liz Truss's disastrous mini-budget, Conservatives promise a return to sound money, with the sitting Chancellor pledging stability and fiscal responsibility. Consumer spending remains resilient, according to Barclays. That's despite Brexit, COVID and the cost of living crisis. Plus, Donald Trump signs an order banning people from 12 countries from entering the United States. Very good morning. Welcome to Business Live on this Thursday with me, Darren McCaffrey. Sir Mel Stride has apologised for the chaos unleashed by Liz Truss's ill-fated mini-budget back in 2022 and pleaded for time to rebuild the party's economic reputation. The Shadow Chancellor acknowledged the political legacy of the 49-day Truss premiership, admitting the damage to her credibility is not so easily undone.
Today, my party is in a difficult place. Many have lost trust in us, and many are right to be angry. For some Conservatives, our predicament has understandably led to immediate pressures for quick answers, actions promptly to restore our fortunes. But whilst we must strain every sinew to snap back to where we want to be, we should also recognise that this will take time.
Well, that was Mel Stride speaking a little earlier. Let's bring in Maori, who's for us in Westminster this morning. And clearly this is an attempt to move on from that mini-budget. It's dogged the Conservative Party for years.
Yeah, absolutely, Darren. Really, it's Mel Stride going for Liz Truss. He's attacking Liz Truss. He is throwing her under the bus happily. And what was really interesting was he kept talking about how we needed an honest message. He said we need to take our time as a party to come up with credible solutions and realistic, workable policies. I mean, it's a lot of rhetoric, Darren. There is just, spoiler alert, no policy announcement in this speech. It is pure talk, which will always frustrate some. But he talked about how the UK needed to not fall for shallow promises of populism and fantasy economics. Now, just as a side note, he's referring really to Liz Truss and Kwasi Kwarteng and the mini-budget disaster. But I think it's important to remember that it's not really the country that fell for that. It was the Conservative Party that fell for that. The people didn't vote for Liz Truss. They didn't vote for that mini-budget. It was the Conservative Party as MPs and members who voted for that. So I found that slightly fascinating in and of itself. He talked about how the mini-budget stemmed from frustration and high taxes and a lack of growth in the economy and all those kinds of things. However, again, the irony is really quite stark here, where he's talking about the kinds of things that led up to the mini-budget, why people felt the need to go for something that was so radical and ended up being quite a disaster. But again, not really admitting that he was actually part of a government that delivered that, that made people feel that way. But again, we'll put that aside. And interestingly, he's trying to really characterise the Conservative Party as the party with all the answers, the party with the solutions to the nation's problems. But firstly, is anyone going to believe it while he was a cabinet minister in that very government that he's now seeming so ready to rip apart and trample all over? And second of all, do people believe the Tories as a party, that they are actually as ready to be as bold and radical as they say they are? The amount of times that Mel Stride in that speech has said the word radical, he's talking about how it's time to be radical, it's time to rip up the 20 years essentially of economic policy and think in a new way. But I don't know if people believe that Mel Stride himself and the Tory party are really ready for that level of radical. Perhaps that is why Reform is doing so well. He also talks about Reform, of course. He's trying to attack Reform. He's saying that their policies are unworkable, unfunded, fantasy economics. And of course, we know Reform is a massive threat to the Conservative Party at the moment. But at the moment, the difficulty is he's attacking Reform for that. Meanwhile, he's attacking the Labour Party for their economic policies. And as far as he's concerned, the way that the economy hasn't been growing and thriving in the way that he would hope. But again, I come full circle back to this, Darren, which is this was a lot of talk. It was a lot of rhetoric, but very little substance, very little policy. And therefore, we are really waiting with bated breath to hear anything from the Conservative Party that isn't just, we made a mistake and we'll think about it. We're almost a year after the general election now, and really we haven't had any policy ideas. We've got a big speech coming tomorrow from Kemi Badenoch. We hope that maybe there'll be some policy announcements in that we can actually get our teeth into, a bit of meat on the bones. But for now, really, it felt like more talk and a bit of maybe a warm-up act for the Leader of the Opposition tomorrow.
OK, Mari, great stuff. As always, live for us there in Westminster. Thank you very much indeed. Now, Brexit, the pandemic and the rise of Generation Z have completely changed the way we spend our money. That's according to new data collected over the last 10 years by Barclays. The bank, which has analysed billions of transactions today, releases a report suggesting consumers are becoming increasingly savvy at budgeting and spending more than ever on beauty, entertainment and travel. So is the cost of living crisis now officially over? Well, potentially trying to answer that question is Karen Johnson, Head of Retail at Barclays. Good morning to you, Karen. Fascinating survey this, because you've got so much detail in the transactions you've looked at, and we are really seeing the rise of consumer spending in regards to leisure and entertainment, aren't we?
We are indeed, Darren. The report makes some fascinating reading and some great insights as to how consumer spending behaviours have changed over the last 10 years. One thing that's really apparent is that the consumer's definition of value has changed. They are scrutinising prices, they're looking for better deals, but they are wanting experience. And 25% of them have said they would prioritise fun and making memories. Alongside that, we're seeing 2/3 are actually paying more attention to their household budgets. So they're working out how it is they can actually manage their essential spending to create that extra discretionary spend so they can enjoy themselves and spend their money on things that brings them joy.
And Karen, what cost is this coming at? Where are we not spending effectively? There's been a lot of suggestions, isn't there, as people, we're just moving away from owning things, buying products, if you like, and moving towards those experiences you've just been talked about. Is that true? Are we simply buying fewer physical things?
A mixture in there. There's definitely a spending more on experiences. We're seeing 1/3 of consumers spending more on their holidays and getaways than they did 10 years ago, and over 20% of them spending more on live entertainment. So that live experience is absolutely key. But on the other hand, there's a real massive investment in beauty and well-being. 20% of consumers are spending more on those categories. And that's as people invest in their health, their well-being, so they can perhaps do the other things that they enjoy as well. In terms of areas where people aren't spending as much, you're quite right in terms of some of the more material products, but where people are continuing to spend on those is where they get that really positive experience from doing so, from the interaction and engagement that they have in that buying experience.
And Karen, we've talked about consumer confidence quite a lot recently, given obviously concerns about the wider economy, not least of all globally as well, when you look at tariffs, for example. Where do you think consumer confidence is at the moment here in the UK?
So consumer confidence in the actual UK itself has dropped to about 28%. It was at 45% 10 years ago, but an awful lot has happened since then. Looking forward, there's an awful lot of geopolitical events. There's a lot of focus on people's spending, inflation and what they can do. But on the other hand, we have seen confidence in household finances remain relatively strong. In the last 12 months, it's just short of 70% of people are confident in their household finances, and therefore their capacity to spend is there. Just how they are choosing to spend it is changing, and that confidence continues at this point in time.
Karen, great stuff. Thank you very much. Indeed, fascinating, isn't it? Karen Johnson there, the Head of Retail at Barclays. And you can get more, indeed, on that story on our Money blog. about how you're spending your money. Just scan the QR code that's on your screen right now, and that'll take you to the blog on the Sky News website. Now, the UK-based payments company Wise is to move its primary stock market listing to New York in an attempt to attract more investors and boost its valuation, dealing a flash blow to the London market. The firm, which is listed to great fanfare in London 4 years ago, said the move would increase its appeal to US investors and enhance its expansion plans. Well, delighted to say we can speak to an M&A expert. That is Cyril Abuja-Ode. Thank you very much indeed, Cyril, for joining us. I suppose the first question is, this is quite a significant move and a bit of a surprise, isn't it?
It is. First of all, thanks for having me. It is a surprising move, but not that much of a surprise. There was a time when fintech was meant to be the crown jewel of London's IPO resurgence, but Wise's decision to shift its primary listing to the US makes it clear the UK is struggling to meet the needs of high-growth companies. And the main reason behind that are liquidity, culture, and also regulation.
And it's not the first time this has obviously happened. It is, again, a reminder of almost a kind of reputational blow to London. It's really been struggling in recent years.
Definitely. And this isn't an isolated move. Revolut is actively exploring a US listing. Monzo is weighing its options. Zilch hasn't committed to London yet. And Starling is holding back. So it is definitely not an isolated move. And you were just talking about consumer confidence in the UK that has dropped significantly. This is definitely helping the case of the US IPO market.
Yeah, even with all that uncertainty, what would you say to officials potentially watching this programme, the government? What can they do? What would you like to see change to make London more of an attractive place?
Democratize.
It's a big question, I know.
It is a big question, but definitely democratize public markets. Just look at the numbers. The total market cap in the US is above 55 trillion, where in the UK is only 3. The average volume in the US is around 290 billion euros versus around 65 in all of Europe. And this is also heavily driven also by a consumer and by retail traders, not only very large institutions. And with more deregulation and better access to capital markets, also with, for example, the likes of Robinhood in the US, that could be helped in the UK. But regulation is a big stopper to these retail platforms. OK. Cyril, really appreciate your time this afternoon, this morning, I should say. That's Cyril Abuja-Ode. Thank you very much indeed. Thank you. Now, Donald Trump has signed an order banning people from 12 countries from entering the United States. He said that Sunday's attack in Colorado had shown the extreme dangers of foreign nationals who are not properly vetted. The White House has said that some countries on the ban list had a significant terrorist presence and accused others of poor screening for dangerous individuals and not accepting deportees. Well, let's talk a little bit about this and indeed the wider travel industry with James Thornton, who's Chief Executive at Intrepid Travel. Good morning to you, James. I suppose what happened overnight in the United States with that Donald Trump announcement is a reminder of the unpredictability when it comes to travel, isn't it?
Yeah, it certainly is. But I guess it's been in the works for a couple of months now since the Trump administration came to power. There was talk that a travel ban might be introduced again, as it was in Trump's first term in 2017. So while the news is a degree of uncertainty and it's unfortunate, it's perhaps not expected and in line with some of the practices that the Trump regime has been putting out this time around.
And just let's talk about travel. We were just talking to Barclays there about the fact that people are spending money more now on experiences, aren't they, rather than on physical things to a degree. And I assume that's good for your business.
Yeah, it absolutely is. We're certainly seeing it. Experiences is being prioritised by people. They're looking to get out and have adventures. Having been stuck at home during COVID times, people don't take travel for granted anymore. And we're seeing that prioritisation in terms of spend, that people are wanting to get out and to have great iconic trips, to visit some of the wonderful parts of the world that exist, to spend their money with local communities. and to make sure that they keep prioritising wonderful travel experiences. And that's certainly what we're seeing in Intrepid, with our sales up 15 to 20% this year after a record year in 2024.
And James, we're obviously going into the summer season, aren't we now? And let's be frank about this, there are places, and I'm thinking mainly of Southern Europe here, that in the summer are now insanely busy, where to the point where people who live there effectively feel overrun. How much do you take that into account when you're looking at markets to operate in and places to take people to?
Yeah, absolutely. Like we've seen the last couple of summer seasons, July and August, Southern Europe is overwhelmed. It can be expensive, it's heated, it's crowded. And certainly what we've seen is that more and more customers are looking to travel to Southern Europe in shoulder seasons. So we're seeing May and June being particularly popular. We're also seeing record sales coming into September and October for Southern Europe. And what we're seeing people start to prioritise is maybe the desire for coolcations. So we're seeing bookings up to places like Scandinavia, or to Northern Europe be very popular in the July and August window, where it's less crowded, it's not as hot, and people are able to get out and have fantastic experiences.
Okay, and just very finally, James, you guys travel all over the world to quite interesting places. Where are the kind of hotspots that people are potentially going to in the year ahead that aren't necessarily top of many lists, the kind of weird and wonderful places around the world?
Look, there's so many fantastic adventures to get out there and have, aren't there? So we're seeing places like Japan, Vietnam, Morocco be particularly popular at Intrepid, but we're also seeing those lesser-known destinations. So Greenland is one that's popping up as a bit of an iconic, lesser-known place. We've seen Iceland be very popular in previous years. Greenland with the new international airport, operating new products and trips there, be very exciting and interesting. Also, some places in Southern Europe, South America, should I say, so away from the kind of Brazils and Argentinas into places like Uruguay and also Peru. So lots of great adventures to have out there for lots of people.
Marvellous. Interesting you said Greenland there. It is on my list. I'm going there in August, which I'm much looking forward to. James from Intrepid, James Thornton there. Thank you very much indeed.
Thank you.
Now, we've got a little bit of news about us here at Sky, because starting from tomorrow, Sky News will launch a new financial newsletter. It builds on the success of our award-winning money blog and will deliver all the money news you need once a week. Well, delighted to say in the studio is Jess Sharp, who is our Money Live reporter and is with me in the studio. This is all very exciting. Talk us through what this newsletter is going to be like.
Yeah, very, very exciting. So essentially the money newsletter is going to be your personal finance companion. It will land in your inbox every Friday, and it's going to have everything in there, tips, data, exclusive analysis to help you make the most of your money. So whether that's the best mortgage rates, the best savings rates, the best way for you to make money by switching accounts or changing your broadband deal, it's going to help you to work out the best ways to make your money stretch a little bit further and to give you a wider view of how bigger economic issues are affecting the money that's right in your pocket.
Yeah, and it is fascinating, isn't it, when you look at things like mortgages or how to save properly or what's the best account or even the best mobile phone contract. This all matters because even little savings here and there mount up over time, don't they?
Definitely. And, money and making decisions about your money can be quite daunting, and everybody's worried about making the wrong choice. The money newsletter, similarly to the money blog, is trying to help people be empowered to make the right decisions for them by us giving them as much information as we can in a really digestible, easy to understand way.
Yeah, and just very finally, of course, how do we sign up, Jess?
Well, you can scan the QR code that I'm sure will come up on your screen now.
There it is.
And that will take you to the money blog. Put in your first name, your last name, and your email address, and you'll be subscribed.
Great. It's almost as if we planned that, Jess. Thank you very much indeed. Jess Sharp there from our money blog. Thank you. OK, you're watching Sky News and Business Live. Coming up next, we're going to be looking at how the markets are doing today. There they are, the FTSE up a fraction. All the details after the break.
jubilation in the streets, while some emotional.
This is a political victory for Prime Minister Modi and his Hindu Nationalist Party. I'm Neville Lazarus and I'm Sky's reporter based in Delhi. Companies like these are helping India in its trajectory to be a serious player in space exploration. Sky News, get the full story first.
Staying connected is vital for business. Sky Business sponsors this report. Sky Business sponsors this report.
Welcome back. Let's have a look at how the markets are doing this morning. Delighted to say we can speak to Chris Clovier, Co-Chief Investment Officer at CG Asset Management. Chris, good morning to you. Let's first of all talk about the European Central Bank.
Certainly, and good morning. Thanks very much for having me. So I guess we've got the decision coming up shortly. The ECB is forecast to make its eighth rate cut of this cycle and bring rates down to 2.15%. I don't have I'm not a particularly acute ECB watcher, and so I don't have a particularly strong view. I think that they seem pretty dead set that they are going to cut. I guess the much bigger question is, what are they going to do next? Because they're faced with really quite a lot of uncertainty.
And talking about uncertainty, we've seen uncertainty effectively hammer a little bit the US economy. Clearly concerns about growth there. There's been concerns, hasn't it, also about the US government debt, which the bond market's been reacted to, and also a big impact on the dollar. I mean, you only need to look at our market report there to see that sterling and the euro been up quite substantially in the last couple of weeks against the US dollar.
Yeah, I think it's clearly a cause for concern among the markets at the moment, and markets have, I would say, become very twitchy about the fiscal outlook in the US. So the budget deficit is forecast to be 6.5% this year and 6.8% next year. And so that's a deficit of $1.8 trillion, which is a truly phenomenal sum. And so what we've seen is that we've seen both interest rates rising, but also the dollar falling. And that's not what you would normally expect. Normally, you'd expect to see that when interest rates rise, people think that they can earn a higher return on dollar assets. And so then that means they buy dollars, the currency goes up. So why is it that markets have suddenly got nervous about this? I think there's three things going on. The first is that for a long period of time, Scott Bessent, the US Treasury Secretary, was advocating his 3+3+3 plan. And that was to get GDP growth sustainably to 3%, get the budget deficit down to 3%, and to increase oil production by 3 million barrels. All of that is looking pretty fanciful at the moment. And I think the markets have been taking some comfort from that. And now that looks increasingly unrealistic, they're getting much twitchier about where everything's going.
OK, Chris, really appreciate your time and your insight this morning there from CG Asset Management. Thank you. We're just going to bring you up to date with a little bit of breaking news coming into us here at Sky, and that is from the Prime Minister's spokesperson saying that Keir Starmer will meet with NATO Chief Mark Rutte, NATO Secretary General, on Monday. That's to discuss how members can increase defence spending. Effectively, we know there's this meeting taking place of defence ministers in Brussels at the moment, the United States trying to push people up to 5%. UK is not even committed to 3% at the moment in terms of an actual timetable. But the Prime Minister going to meet with Mark Rutte on Monday.
OK, that's it from me on Business Live for the moment. We're back at 4:30 this afternoon. Show me then if you can.